You have now learned several of the procedural steps of an accountant's job. 1. Making a journal entry for each transaction. 2. Posting journal entries to ledger accounts. 3. Making a trial balance. These steps basically consist of gathering and recording data. Now you will begin preparing these figures to be used in financial statements that will be presented to the owners and executives of the business. This is very important because these reports will assist them in their financial planning. Before you can make final financial reports for the accounting period, you will need to make changes or adjustments in your trial balance figures to allow for situations and events that were not recorded in the day-to-day entries and postings. There are 5 types of adjusting journal entries. Prepaid expenses. What if you have not been making a change in your office supply ledger account each time a supply is used? You will now have to take an inventory count of your office supplies to see the value of what you actually have on hand and adjust the account balance accordingly. Unearned revenue. What if your customer purchased an annual service contract from you for $12,000, which they paid up front? Or on the flip side, accrued revenues. A customer acquired goods and agreed to pay the following month. Accrued expenses. You may owe wages, salaries, or commissions that have not yet appeared on these expense accounts because they have not yet been paid. Furthermore, machinery and buildings wear out or depreciate, and an adjustment must be made to your capital asset accounts. Or the books may need to reflect that statistically a percentage of your customers will never pay their bills. The accountant must take the initiative here because unlike transactions, adjustments are not usually supported by paper documentation. You may have to request information from others in the firm, take inventories, or consult records from prior years to see what kind of adjustments are generally required. Setting up your worksheet. The worksheet has 10 columns, which consist of a debit column and credit column for each of 5 categories. An adjusted trial balance, adjustments, adjusted trial balance, income statement, balance sheet. Unadjusted trial balance. Some of the account balances shown will be incorrect, not because of errors, but because adjustments must be made, usually at year's end, to update some figures. Simply put, an unadjusted trial balance is a trial balance before adjustments are made to correct for unrecorded changes to various accounts during the financial period. Adjustments to trial balance. Suppose you started the month or other accounting period with $3,500 worth of office supplies available for use. Now, at the end of the period, you have taken an inventory and found that only $1,300 worth of office supplies remains on the shelves. By subtracting $1,300, the remaining amount, from $3,500, the trial balance amount for the office supplies account, you find that $2,200 in supplies has been consumed in day-to-day use that was not recorded. You must adjust your trial balance to reflect this $2,200 change, which will eventually be shown on the income statement as an office supplies expense. Here is a journal entry. You debit office supplies expense for $2,200 and credit office supplies for $2,200. An adjusted trial balance is a balance at the end of an accounting period, usually 1 year, that reflects changes not previously recorded in day-to-day accounting. Now let's turn to the issue of depreciation. The depreciation calculated for furniture and fixtures for the period is $750. Now, here is a journal entry. You debit depreciation expense for $750 and credit accumulated depreciation for $750. Accumulated depreciation is a contra asset account charged against assets. This is used to determine the total current value of fixed assets. I'll be going over depreciation more in depth later in my future video. Finally, you realize that as of the last day of the account period, several days' pay will be due to the employees, amount to $3,100. To reflect reality, a salaries expense must be shown as a debit, and a liability called salaries payable must be credited with this amount. Here is a journal entry. I'll be going over payroll records and how to enter payroll information on the books later in my future video, so I invite you to subscribe to watch my future presentations. Adjusted trial balance. When you have entered all the necessary adjustments in columns 3 and 4, it is time to extend the totals to arrive at your adjusted trial balance in columns 5 and 6. If no adjustment was necessary for an account, then you simply bring the amounts from columns 1 and 2 over to columns 5 and 6. For instance, cash. No adjustment was made for cash account, so you simply bring the $18,800 over. But if, for example, there is a debit in column 1 and a credit in column 4, you must subtract one from the other and enter the result, whether a debit or credit in column 5 or 6, respectively. The answers will be recorded on the side, debit or credit, that was larger. For example, office supplies. You have a debit of $3,500 in column 1. You have a credit of $2,200 in column 4. So you must subtract $2,200 from $3,500, and the difference goes to either a debit or credit here in columns 5 or 6, depending the larger side. Since debit is larger, we debit $1,300 in column 5. If columns 2 and column 4 both show credits, they must be added, and the sum carried into column 6, just like accumulated depreciation account. We simply add $8,200 and $750, and we credit the total of $8,950. If there's a debit in column 1 and an adjustment debit in column 3, these are added and the sum put into column 5, the adjusted debit column. Just like the salaries expense account here, we add debit of $45,500 and adjusted debit amount of $3,100. And the sum goes to column 5, debit of $48,600. To verify that you have performed these steps correctly, add up the columns. Columns 3 and 4 should be equal, and so should columns 5 and 6. If they are not, check your work on each line before proceeding. A simple way to remember whether to add or subtract is, when they're the same, both debits or both credits, you will add them. When they're different, one debit and one credit, you will subtract them. Journalizing the adjustment entries. To complete your worksheet, you will now need to enter each adjustment in the general journal. Remember, the journal is used to record all changes in the business. Adjustment to journal entries is a method of ensuring that all changes in the business are recorded in the journal. In adjusting journal entries, follow the rules below. The terms increase and decrease refer to the normal balance of the account. To adjust a prepaid item that has been consumed through the passage of time, increase the expense with a debit and decrease the asset with a credit. Example: office supplies expense, debit. Office supplies, credit. To show depreciation adjustment, increase the expense with a debit and increase the accumulated depreciation with a credit. Example: depreciation expense, debit. Accumulated depreciation, credit. To adjust a payable, increase the expense with a debit and increase the payable with a credit. Example: salaries expense, debit. Salaries payable, credit. The adjusted trial balance will be used to generate two key financial statements. After the adjustments have been made, journal entries must be entered to document the changes. The worksheet is not a final report. Rather, it is a tool to ensure accuracy and completeness when the financial statements are compiled.